Hi everyone, so today we're going to be covering a new company. It's going to be a stock analysis video from Motorola. Let's get right into it. I'm going to first go ahead and share my screen on what they actually do. And just so people know, they have about an $80 billion market cap. However, they sell mission critical communication infrastructure devices and software to government and enterprise commercials. They pretty much rely on something called LMR or land mobile radio networks. That's their most important thing because they own a 80% market share in LMR network deployments. And that's going to be 60% of their total revenue. So that's the important thing to know. That involves selling LMR, video surveillance, body-worn cameras, and related hardware. So you really just need to know that primarily because that is their obviously 60% revenue is their biggest portion of it. Now, their earnings came out 2 days ago and they were quite good. It was for the fourth quarter of 2025 and for the full year of 2025. So non-GAAP EPS for Q4, keep in mind, was $4.59. They beat the consensus estimate. Revenue was up 12% year over year. The backlog also increased to an all-time high of 15.7 billion, an increase of 1 billion over the prior year. Now, the full year 2025 total revenue was up 8%, excuse me, not 18, 8%. Non-GAAP EPS was up 11%. Cash flow general, we'll get into cash flow in a second. And the full year or the outlook for the expectations for 2026, approximately $12.7 billion in revenue, EPS from, let's say, 16 bucks 85 cents. And the Q1 2026 guidance revenue growth is 6-7%. So overall, I think it looks pretty good. Now, let's take a look at what Tipranks is saying. Tipranks is saying that it's strong by 8 buys, however, only 7% upside, has had quite a rally. So I'm assuming that's why. They're at 461 right now. Their average is 495 and their low is 450. So you have to keep in mind of that. Now, when we take a look at Simply Wall Street is going to say, because this is free cash flow, it's going to say it's 2.5 billion. Next 3 years is going to be 3.3 billion. So growth is definitely slowed. Obviously, they're only growing 7-8% revenue growth. Makes sense. The financial health of the company, I mean, they came out of negative shareholders' equity recently in 2023. So you have to be, so that's good. But they have a lot of debt. Like significant, like their debt to equity ratio is 329%. I mean, that's quite high. I mean, I get it. They're a big R&D company and, a lot of research and development probably that goes into this. So it makes sense, but wow, that is a significant amount of debt. Now, when we take a look at where they're currently trading at, they're 44% overvalued. Yeah, I mean, I can't blame them. They've had quite a rally. When we take a look at, that was Wall Street forecast, historical growth pretty much close to it, 35% overvalued. Agreed. Again, big rally, so totally makes sense. The other thing we're going to take a look at is, let me just get it out, the net income. And the net income company is going to look pretty good. 1.3 billion. The next, and 2022, now it's 2.1 billion. So slower growth, but certainly growing. So not that bad, I would say overall. So pretty good overall, yeah. And lastly, we're going to take a look at their 52-week high and low. Right now, 461, 52-week high 492, 52-week low of 359. So they're currently on the high side. That's why Tipranks is saying there's only 7% upside. Yeah, I would, if you wanted to be long the shares, I would certainly wait for a sell-off. These are quite high. Again, has had a big rally, good company, but very high share price right now. So, but we'll cover for Q1 2026 and how that does. All right, thank you, everyone.